All right, we're live. So welcome back to Dapp University. So today I'm talking about something that's bad for crypto. Okay, we're talking about what that is and why you need to pay attention to this, because this is a pretty big headwind for the entire crypto industry, as a whole. So now about that, we're going to look at a lot of the news updates that have happened in this space since yesterday, check on the crypto markets, answer some of your questions, and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, I think I sent these videos designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them, like I'll never give you my phone number or ask you to invest with me. So we got people jumping in the chat here. We got Culture Hives, David, Alan, Kaz, Anthony, ADM, Brick. Welcome. All right, so we got some interesting questions in the chat already. Let's go ahead and kick us off here with our initial story for today. Something that's bad for crypto. Okay, so I saw this come up yesterday, and this is something that is really important for the entire crypto space as a whole right now, because this is a major headwind that the entire industry has to face in order to really, get to where it wants to go. So we talked about this briefly on our live streams that we do Monday through Friday on this channel about 9:30 a.m. Central Time. Just make sure you subscribe to the channel, turn on notifications down below. You'll find out about whenever we go live. We're talking about Coinbase, okay? So Coinbase has decided to launch their lending program, okay, where you can earn passive income reward for just like parking crypto assets inside your account with USDC, all right? So we actually have news that Coinbase has dropped this lend program after the SEC warning. So let me just kind of back up and give you the backstory, give you more context to understand what this is and why it's important. So Coinbase is one of the largest cryptocurrency exchanges in the world. So I think it's the biggest in the United States. Now, I could be wrong about that, but I'm pretty sure it is. And they were talking about launching this lending program, because one of the biggest kind of use cases for crypto that's got people really excited is just yield, okay, where you can basically take dollars, stable currencies, prices and change, convert it into cryptocurrency, so USDC in this case, and then earn a competitive interest rate that's way better than you would get in your bank account. So here, Coinbase is basically going to launch this program to where people can get 4% on their dollars, basically, by converting them into USDC, holding their account, and then they would actually perform lending on the other side. It just works like your bank does, basically, where you deposit money in, and they're issuing out loans on the other side. And then they're charging a fee for those loans. Of course, they're charging interest, and then you earn, part of that interest, part of that spread as an incentive for you to, deposit your funds. And that's exactly what Coinbase is doing here. So Coinbase built this feature, got it ready, put it out there online. Not out there online, sorry. They announced it online, and then at the time of the announcement, basically they're saying, hey, they're getting this ready, and they voluntarily were clearing this by the SEC. All right, so I can go back and check the details on this. And they built this, and they were like, hey, don't launch this. Like you can't do this after going all through this, right? And so they were like, okay, this is crazy. They started talking about it online, talking about how they were going to try to fight this and what they could do about it. We saw people like Mark Cuban weigh in on, how they should, kind of fight back against the SEC in this case. And it looks like this is a battle lost. Okay. So why is this bad? Well, one of the final bosses for crypto in terms of decentralized finance, or DeFi, and I realize that a lot of people will say, hey, Coinbase isn't very DeFi. I'm choosing DeFi as a sort of broad brushstroke to talk about all crypto-based use cases that involve finance. Okay, so whether it's speculating on cryptocurrencies, whether it's doing borrowing and lending with smart contracts on a blockchain, or doing borrowing and lending through a centralized service like Coinbase, I'm going to kind of just group all that into one big bucket, because that's kind of how the SEC is probably thinking about it. So anyways, regulation is one of the final bosses for all this technology to really flourish, because one of the reasons that I think it's not growing as fast as it could be is the regulatory risk. Basically, there's uncertainty from regulators about, hey, what's permissible in DeFi, what's a security, what's not a security, who's operating, legally, who's doing things illegally. And I think that's holding a lot of people back, especially institutional funds, from really kind of going all in, putting all the chips on the table. and reeling into this industry, okay? Now, the flip side of that is that there's more upside reward while you still have this regulatory uncertainty because, hey, if we think we can get past regulations eventually or maybe outrun them, then there's people too scared to get in right now. You get to front run that opportunity, get a nice position, and then, once you think you have that clarity, then, you can capitalize on the upside. But even then, to get to that point, we need to get past the regulators, okay? And this is honestly, SEC pushing back on this, and then Coinbase being like, hey, we're not going to do this. It's an L, you know what I mean, for all of crypto. And so, this likely could set the tone for what's going to happen with others. We've seen some crackdowns, not from the SEC necessarily, but by other regulators on BlockFi, different states, stuff like that, who are doing similar types of things with crypto lending services. So yeah, this is definitely a headwind that we have to get past. So I'd like to see more, minds kind of come around, figure out how we can solve this problem. Of course, people talking more about how crypto needs more representation in traditional government, how we can fix these problems. I mean, I'm clearly not an expert in this particular area. I mean, public policy and, how regulations work around this particular technology. I can see how the structures work, but as far as, actually strategies to, playing nice with regulators and having to make, new regulations that are appropriate for crypto, that's a totally different ballgame. So what do y'all think down in the comment section below? So what do I think more in the USA? So don't spread more FUD. This is not FUD, okay? So, if you're going to be in crypto and you're going to actually be honest about the path that you're on, you can't just call anything you don't like FUD, okay? That's part of what critical thinking is about. If you're in this game, the best thing to do is, try to do the hard work of figuring out where things are headed. Try to make predictions. Nobody can perfectly predict the future, but you really have to try if you're going to be successful in this industry. And then you have to very clearly outline, what you don't know and what are the potential failure points for you getting from point A to point B. And regulations is one of those. So anytime you see bad news about regulation, that's a step in the wrong direction. Can't just label it FUD because you don't like it. It has to be dealt with. So people saying it's just in the USA. That's true. This is primarily about the United States. There was a lot of people watching this channel are not in the United States. That being said, it's very common for the U.S. to set the tone on how other, specifically Western countries, are going to deal with this type of thing. Now, there will be differences for sure, but that's very common. So what happens in the U.S. can be bad for the rest of the world. Somebody says if they could get deposits insured, I think the SEC would be more comfortable with it. Yeah, maybe. So let's go ahead and look at the actual crypto markets, okay? Because yesterday we talked about this, where we're seeing a correction right now. Let me pull it up on my screen here. All markets are kind of getting hammered, right? Bitcoin's down to about, I think it dipped into the 41,000s, right? Actually into the, down to the 41,000s. Currently 42,000. Of course, we're down from, we peaked up around 50,000 was our sort of local top of the past couple weeks. Ether's dipped down just below $3,000. Other majors are getting hit pretty hard. Of course, altcoins are getting smashed too. So what's sort of my outlook on this? Well, I talked about it yesterday. I think crypto is pretty correlated with, global markets in general in terms of the downside risk, in terms of corrections. Don't forget, crypto doesn't exist in a bubble. Crypto can go up by itself for sure. But when we see massive sell-offs in other markets, crypto tends to follow with it, okay? So the S&P 500, traditional markets have taken a hit this past week. Let me just see here. Of course, we start to see a little bit of a rebound here. We'll see what happens, but I think, crypto is pretty correlated with what's happening here right now. in terms of the macro outlook, we talked about, again, I'm not a macro expert, but I can tell you what people who are much more in tune with the macro conversation are saying. The Asian real estate market, what's happening with Evergrande. Again, not going to go too far into the weeds on that one because it's frankly outside my area of expertise. But that's caused a panic. If I had to guess, I would say it's a localized thing just by sheer probability, because the amount of times that you could predict something that was a major, domino to knock down all the rest of the dominoes across the world, the amount of times that you could correctly predict that, you could probably count on one hand in the past, 100 years or so, something like that. So just by sheer probability, I don't think it's going to be, the butterfly effect that nukes the entire world. But we'll have to wait and see, right? And what's my outlook on the crypto markets? Still cautiously bullish on the overall space because barring some sort of major, kind of meltdown across the world, fundamentally nothing's really changed in crypto land. We're still seeing lots of adoption. We're still seeing lots of, everything kind of trending upward. And the prices might have some volatility along the way and introduce a significant amount of noise into that kind of motion. But, barring something else bigger happening in the global economy, nothing's really fundamentally changed in terms of crypto adoption in my mind. That's why I still maintain cautiously bullish. In the short term, nobody's got a crystal ball. We could go lower from here in cryptocurrency prices, but I'm still, like I said, cautiously bullish. Let me know what y'all think down in the chat section below. Somebody says September is usually red. That's true. Historically speaking, if you were to graph out Bitcoin returns, on a spreadsheet or something like that, and look at it based on months, September is usually red. I don't know how statistically significant that really is. I mean, it's also been true of March, and I think March was a green month for Bitcoin this past year. It's hard to know, if there's actually a cause behind that or if it's just kind of coincidence. All right, let's see here. Somebody says BlackRock is a big stakeholder in Evergrande. Maybe. Yeah, I'm not sure, to tell you the truth. There is kind of a thesis out there, though, that, a lot of this volatility that we're experiencing on the Bitcoin price actually can make things a lot stronger for a big leg up. Okay, so, if you have some consolidation around this period, then we kind of comfortably have a historical Bitcoin price between $30,000 and let's see, this was on, let's just say that the Bitcoin price and the entire crypto market, let's just say we're kind of stuck in this limbo period for a while, and maybe we don't break out of, we don't break a new all-time high till maybe December or something like that, right? That means that Bitcoin will have been in this sort of 50% range of $30,000 to about $60,000 for an entire year. Okay, I realize it broke slightly below $30,000 in this area here, but that's really bullish for the long-term price of Bitcoin, because if people are ultimately worried about Bitcoin going back down to $15,000 or $10,000, $5,000, whatever it is, right? That makes it way less likely that that's ever going to happen again. If Bitcoin, if we hold some support here and it takes Bitcoin a little while to climb back up to the $60,000 a minute, maybe not breaking an all-time high till maybe the end of the year or something like that, that's actually long-term really bullish if you're in this for the long game, because that means we now have a firmly established Bitcoin at these higher price levels, and we could comfortably support a much, 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 much higher blow-off top price for Bitcoin, assuming that the market actually does that, which historically speaking, it tends to do. And this would be a situation where you have a longer cycle than people are expecting. It would defy a lot of people's expectations. I know some people out there are supportive of the longer cycle thesis, maybe the super cycle thesis, but that's just something to keep watching out for. Somebody says contagion fear is driving an indiscriminate pullback. Yeah, I think that people are worried about Delta and contagion, all that type of stuff, and that's definitely a big factor. Another big factor is inflation, sort of what's going on with the Fed policy. I think it's another concern that's at the top of people's mind. I think people are just generally worried about the integrity of the financial system in general. Okay, so let's look at a couple other things here. Actually, gonna pull this up. Let's actually go ahead and check on the statistics for. Actually, somebody yesterday asked me about on-chain metrics, so let's look at it. People want to kind of take a look at how the on-chain metrics are doing. Let's just pull it up on my screen here. Okay, so let's look at so we can look at some of these metrics. So we can see the number of active addresses, 7-day moving average for Bitcoin. Let's make sure that we're actually on the right date here. This is as of September 16th. So on-chain metrics, active addresses are still trending upward, which is bullish. Let's take a look at some of the other metrics here. Let's actually look at some of the top bottom indicators. These are some of the things we were checking on pretty regularly, kind of earlier this year when we were tracking what was happening in the bull market. We haven't been looking at them so much because we haven't been worried too much about like an actual top. Okay, so let's look at. Let's see if I can find it right now. Hold on. We can look at our net unrealized profit loss. And so what I was saying before, this is actually a pretty good metric to help illustrate this, because basically whenever you have these longer periods of Bitcoin kind of being in this volatile range, basically that can be long-term bullish for the health of the overall crypto market. Because if you take a lot of these metrics at face value, like the top bottom indicators, like net unrealized profit loss, where you're basically looking at the froth of the market. Basically, the whole idea here is that anytime you're in this period of blue, you're in a euphoric territory, because it basically measures the ratio of the net profit of the entire network. And so, like, basically, the whole idea is like when basically everybody's in profit and significant profit, that means you're in this euphoric state, and you're probably going to see some sort of top. That's happened many times. It's not always a perfect indicator, but it's pretty good. We kissed the euphoric line here earlier this year. We didn't really cross it before we saw this rounded top structure. But the whole point here is this Nupal metric increases the faster you go up in price. So basically, like you never want to cross Nupal value 0.75, and so the current price level, of course, for Bitcoin is about $47,000. So I'll just give you a hint. When we kissed that euphoric line, we were at about 40. We almost kissed it at $40,000, okay? But now we're at $47,000 or 42, whatever the price is, $42,000. And we're at a Nupal value of 0.5, okay? So that gives us a lot more headroom for the market to get, kind of frothy. Because when crypto starts crashing is when it gets really exuberant, euphoric, moves up really fast. And if you can kind of, slow play into that, it can make the top go higher. You see this pattern play out all places. It's momentum. It's a base structure. Yeah. So how to launch your own DEX like pancakeswap? It's pretty easy actually. You just fork the code and then you put it on the blockchain. Now, yeah, of course, have to check the license agreement for whatever you're forking. Just because it's open source and you can do it doesn't necessarily mean it's legal for you to do it. Of course, if you're an anonymous developer in crypto, then what are they going to do? But, I mean, you're still breaking the law, so you definitely need to know that. But anyways, I mean, for educational purposes, let's say you just wanted to do that, not actually launch a real cryptocurrency exchange. You could go look at the code. PancakeSwap, I'm pretty sure, is based off Uniswap version 2. So it was like SushiSwap. So you could literally just take Uniswap version 2 code. You could take SushiSwap code, whatever it is. Fork it. You could tweak it. You could deploy it to a test network, or you could deploy it to like a forked version of the mainnet, like a sandbox environment. You could modify it, try to deploy it to a development blockchain, try to mess around with it that way. It's a great learning experience if you want to do that and set it up and kind of see how it works. But definitely check the license agreement before you go operate somebody else's code in production. It is a lot of work. This guy can't add simple math using a calculator, and you tell him about crypto. Shaking my head. 487 people are being fooled. I think he's referencing like one live stream where I kind of fumbled math on a calculator. It's actually a lot harder to, basically improvise math correctly on screen with a lot of people watching you. I guess if you're gonna roll up in here and be like critical, maybe tell me why I should listen to you and how you can do it better. So does Dapp University require previous knowledge in programming? So it is not. So of course, having programming experience is always going to help you. It's always going to make it go faster. It's not required. I've helped people with zero programming experience become real-world blockchain developers in a matter of months. Of course, not everybody's going to accomplish that in a matter of months. It depends on a lot of factors, like your available time to devote to it, your interest level, your natural proclivity, all those types of things. But no, you don't have to have programming experience to get started. And here's what I would say. If you want to get into it and you want to learn blockchain, don't go learn a bunch of other stuff before you decide to learn blockchain. It's going to slow you down, and really should start with blockchain first and learn everything else as you go. So what does that look like? So basically it means if you want to become a blockchain developer and program smart contracts, start programming smart contracts. Just do it. You don't need to go learn JavaScript first. Just learn JavaScript that you need to know in order to program smart contracts, which is basically just going to be like to write tests and then build a website. So start with the smart contract part, learn Solidity, figure out how Solidity functions work. You don't even have to set up stuff on your computer. You can do it all in your browser. And then you don't even need JavaScript in that case. But then when you get to the point of testing it, actually writing automated tests, that's when you go learn a framework and then set up the framework, write the test to make sure it works. I mean, you could literally just learn Solidity, go to remix.ethereum.org, like just code a hello world smart contract that just has a variable name that says, hello world, and then just like click deploy, and then read the hello world message, and you've just coded a smart contract. Now, it's not a very advanced smart contract, but you'll learn a lot of basics, and you can do that in about 10 minutes. And then you just increase the complexity from there. Now, I know that sounds, simple, but a lot of people make it more complicated than it has to be just to get started. Like, don't overcomplicate it. Just start. It will get complicated fast, but that's the whole purpose, is to have some sort of guided resource that introduces the complexity as necessary. Somebody says, will Evergrande China news affect stock market and crypto markets? So it already has affected it, in my opinion, at least people's perception of it. Now, whether the fundamentals have really affected the overall markets is, remains to be seen. But I think there is some short-term panic, and I do think it is a factor. Now, how much more it continues to impact it, hard to say. Somebody says, when can we expect a Dapp Uni NFT drop? So we actually already have a Dapp Uni NFT. So we did this for the pilot program for Blockchain Mastery University. So it's not really a collectible NFT. It was used for membership. But we might have an NFT drop. We'll see. Stay tuned. Okay, so let's actually look at some statistics, more stats. We can check on the ETH burning statistics. So basically, this is the impact of EIP 1559. So we already are having some deflationary blocks. So 1, 2, 3, 4, 5 of, let's see, 3, 6, 7, 5 of 7 on this page are deflationary. Okay, so anytime you see more than 2 ETH burned, so 5 of 7, I mean, over a short period of time, see the math on my phone's a lot easier. That's 71%. 71% of those blocks were deflationary. So that's bullish for ETH price, at least on the economics of ETH. If we simulate the merge, we're at negative 1.9% inflation. Okay, so let's look at, I actually want to bring up something that I came across on Twitter. So this is a pretty small account. I saw some other accounts that I follow interacting with this person, and I wanted to actually bring it up because I thought it was pretty cool. So these are not official features. Okay, these are just mock-ups and renderings, but it's some conceptual ideas about how you could integrate crypto into existing products. And that's something I like to talk about on this channel, so that you can kind of envision what the potential of crypto is and how it can be integrated into people's everyday lives, okay? So, like I said, I just came across this account on Twitter. If you're watching this live stream, you know this person. Definitely, you can show them this video because I think it's really cool what they've done here. But basically, some mock-ups on how you can integrate crypto into these products. So right here we have a mock-up of what it could look like, basically to have. Sorry, that music kind of loud. Let me turn it down. Crypto wallet inside of Twitter. Okay, so let me just pull it up here. So basically, you could have like a wallet tab, where you could add a wallet, and you could actually see, the NFTs in your collection. You could actually use your wallet inside the application. You could send to a different social account if they had their confirmed address on there. You could see, and it's not an official Twitter feature. Like I said, this is just a mock-up, but this kind of gives you an idea of what you could do with this. Also, they have one for Apple collections, which is kind of a concept that they came up with. I thought it was pretty cool because you could see how you could maybe like trade NFTs or any kind of digital collection or interact with another person with their crypto wallet like natively inside of an Apple product. Again, this is just a mock-up. It's not an official feature or anything, but it's pretty cool. I want to share it with you. This is from Jasper here. So check it out. So yeah, it's pretty cool, like how you could actually trade assets with people peer to peer. So I really like this, how you could kind of have a swap where you could basically have some sort of invitation to trade something with somebody else, and then it could text them this card that it visually shows like what you're trying to swap. It looks like this is 2 different NFTs, and then the person could accept the swap, they could deny the swap, maybe they could change what they want to swap for. And then you both sign it, confirm it, and then it would actually facilitate the swap on the blockchain. So that's pretty cool. Like I said, I saw this, wanted to bring it up because this can kind of help you see like how could you integrate crypto into real products. Again, these are not on the official roadmaps of these products. These are complete mock-ups done by Jasper here, but I thought it was pretty cool. It illustrates, you know, kind of what's possible when you can actually visualize it with crypto. So it's kind of about Loot Project. So I did see Loot when it first came out. I didn't get any Loot, unfortunately. But we talked about Loot some on the live stream before. I haven't really kept up with it consistently since it's been out, though. There's a lot to pay attention to. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. You know, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find out my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, you know, maybe you want to take a master shortcut entirely, I should become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp University.